1 second. Okay. Who's in the house today? No, I'm sorry. Good morning. Hello. What's up? Thank you for joining. Okay, so how are you doing this morning? Hold on 1 second. Feel like, okay, this is too much here. Alright, so I am going to stay maybe a couple hours today. There's a lot of topic to get through today. Now we noticed that the crypto market is going higher. Obviously, everything is green. Now, is it enthusiastic about what is to come, or is it just pump and dump as well, right? So this type of market, obviously, we tend to not know what's going on, but from what I've heard is that I saw this one here, that Tether printing $1 billion this past few weeks. So perhaps that's what the hold on 1 second. Let me try to find that article right here. All right. Hold on. I'm trying to find the news. Let's see. I should have had it up earlier. Okay, 1 second. I'll be right back. Let me put up. Welcome. Hi, Jason. Small fries for now. Hey, what's up? Football time. So I'm just in here for a few seconds. That's fine. Thank you so much for that. No worry. Go watch your football. This is not that much important. I'm just babbling here, so appreciate all of you joining. All right, even for just a small amount of time. All right. So, as I was saying earlier, of course, we know that crypto has been pumping since a couple weeks already, right? Is it because of the happening enthusiasm and all that stuff for Bitcoin, right? Now, Bitcoin dominance has been going up. Typically, this what it means. What that means is that Bitcoin's going to run faster than any other coin, right? And then there's a period of time where Bitcoin is going to have kind of lower dominance, meaning that Bitcoin's going to run slower than altcoins out there. Now you kind of see that right now. Now, like in the earlier cycle of crypto, Bitcoin used to have like at least 60%, 70% at the time of its running, right? And now you see more and more dominance of Bitcoins being down recently, simply because, if you look at the market cap of Bitcoin, you see that it's like close to $1 trillion, right? At one point, it went up to like 1.4 or $5 trillion. And that's when you see that $60,000 run. Oh, come on, little demon. What you doing? You weren't being like this a couple hours ago. All right, 1 second, you guys. I'm so sorry. Okay, actually, let me leave you with this one. I'm going to talk about this anyway. So, this is going to be about IPO. And I'll be right back to talk about that. But listen to Warren Buffett in a minute. I'm going to kind of speed this whole thing up. So it's going to be around 6 minutes or so. All right, I'll be right back. So
I mentioned earlier how an auction market prevailing in the stock market will offer up extraordinary bargains sometimes, because somebody will sell a 0.5% or 1% of a company at a price that may be a quarter of what it's worth, whereas in negotiated deals you don't get that. An IPO situation more closely approximates a negotiated deal. I mean, the seller decides when to come to market in most cases, and they don't pick a time necessarily that's good for you. So I think it's way less likely that in scanning a list of 100 securities that are trading in the auction market, in the 100 IPOs, if you scan 100 IPOs, you're going to come up with something cheaper than scanning 100 companies that are already trading in the auction market. It is more of a negotiated sale, and negotiated transactions are very hard to get bargains. If you take the houses in Omaha, somebody that lives next door to somebody who sold their house for $80,000 and their house is more or less comparable, they're not going to sell it for $50. It just doesn't happen. It's too important an asset, and they're cognizant of what it brings, what is being brought for similar properties. That's what happens in negotiated sales. Now, if on the other hand, there was a whole bunch of entities that own 1% of each house in Omaha, and you had an auction market in those 1 percentage points, they might sell it damn near anything, and occasionally they sell at crazy prices. So in my view, you're way more likely to get incredible bargains in an auction market. It's just the nature of things. And the IPO is closer. Sometimes there will be IPOs in terrible markets, and they may come very cheap. But by and large, that is not when IPOs come. They come when the seller thinks that the market is ready for them, and they come with an informed seller, thinking it's a pretty good time to go public, and that you'll make better buys in my view in an auction market.
Well, the first question is: it entirely possible that you could use our mental models to find good things to buy among IPOs? The answer is sure. There are a zillion IPOs every year, and buried in those IPOs, I'm sure there are a few cinches that a really intelligent person could find and pounce on. So welcome. But the average person buying IPOs is going to get creamed. So if you're talented enough, why sure, that will work. Yeah, because the IPOs are normally small enough so that they won't work for us, or they're high-tech where we couldn't understand them. And so, by and large, if Warren is looking at them, I don't know about it.
Many of us are interested in what you, meaning Berkshire, are buying, and you won't tell us that. Using Charlie's principle of invert, always invert, maybe you can help us by suggesting what to avoid and stay away from. Specifically, what in the investment world today strikes you as folly, fad, unsustainable, crazy, or dumb?
A lot.
Yeah, well, I think I would describe it as we try to stay away from the things to start with that we don't understand. And when I say don't understand, it isn't that I don't understand what a certain business does, but when I say understand, it means that I think I have a reasonable fix on about what the earning power and competitive position will look like in 5 or 10 years. So I've got some notion of how the industry will develop and where the company will stand within the industry. Well, that eliminates a whole bunch of things. And then beyond that, if the price is crazy, even though I understand it, that eliminates another bunch. So you get down to a very small universe, and you get down to a particularly small universe when we're working with lots of money as we are now. But well, I would say this. I can't recall any time in the last 30 years, at least, that we bought a new issue, have we, Shirley?
I can't think of one.
No. I mean, the idea that somebody is bringing something to market today, a seller who has a choice of when to come to market, and that security, where there's going to be a lot of hoopla connected with it, is going to be the single cheapest thing to buy out of thousands and thousands and thousands of businesses in the world, is nonsense. So,
and when it carries a 7% commission or higher, it's ridiculous.
It's ridiculous. So you know it can't be the most attractive thing. Now, but people get excited about what's coming and all that sort of thing. But I will guarantee you that if you have thousands of opportunities among stocks all over the world, and most of them are not being promoted or being sold with special commissions in them or something else, and then some other security is coming to market that day, when the seller picks the time to bring it, as opposed to just this auction market operating otherwise, it just doesn't make any sense to spend 5 seconds thinking about new issues, so we don't think about them. And we also, there's industries we know they may have a wonderful future, but we don't have the faintest idea who the winners will be, so we don't think about those either. So there's a whole lot of things we don't think about. And Charlie and I have a number of filters that things have to get through very quickly before we're willing to think about them. And sometimes we're thought of as rude. Probably Charlie's thought of that way a little more often than I am. Sometimes we're thought of as rude because people will call us and they start explaining some idea to us, and it just doesn't make it for the first filter or two, and so we think we're saving their time if we just politely say, that we just have no interest, and we don't want to have you finish the sentence. But we do that, don't we? Yeah. We don't have to do very many things that work. I mean, that's the beauty of this business. You don't have to be able, to spell 500 words or something to get to the end of the spelling bee and beat everybody else. You just have to do one or two things every now and then where you don't make a big mistake, and where every now and then one works out real well. And the solution, you'll get a good result. You can't have a big disaster. I mean, you just, that's what we try to avoid. We do not ever want to lose a significant percentage of Berkshire's net worth, and so far we haven't.
I think there are a couple of little rules of thumb. If it's got a really large commission in it,
forget it.
Don't read it, because the chances somebody who's paying a very high commission to give you a big advantage is very low. And the other thing that is, I think, helpful in reverse is as a place to looking at things that other smart people are buying. That is not a crazy search method. It's a sorting device for opportunities to consider.
Charlie knew me when I used to grab the Graham Newman reports as fast as they would come out.
Yeah, sure.
And, if Graham Newman was doing something, it was certainly worth my time to look at.
Now, Warren has made a lot of people rich he doesn't even know. He just copied him.
Anywho, sorry about that. Yes, Toby, Jason. Appreciate that. I saw you wrote Cody earlier. Kobe. But yeah, his name is Toby. So on that particular segment right here that you just listened to, is about IPOs, right? And the reason why I want to bring this up is because it gets all the hype, in the past couple years, and this is how they were pumping, everything else except GameStop to get you to be excited about investing and all that stuff. Most people who bought into the IPO don't realize that it's overvalued already. The reason why it was publicly traded in the first place is because it was private before, right? Initial public offering. That's what IPO stands for. So before it become public, it was private before, and then usually the private company they got the share of the company for promoting it, and let me see. The best example for that is any IPO that was, I think, who's the guy? Hold on. There was a guy who tweeted about, listen to this first, and then I will be back looking for that particular one. Okay. So this is what IPO works usually. So I'll put a link. I'm gonna kind of speed this up a little bit too. Okay, so risk. Hold on 1 second.
Buying a company's first public shares.
Right.
Because, as you'll soon see, it's not always ideal to buy a company right out the gate. There are a lot of risks involved with IPOs, and more times than not, you'll be paying a premium price for a piece of the profit pie, while simultaneously handling some unique disadvantages. Why? Well, let's find out on today's Plain Bagel. Initial public offerings, or IPOs as they're commonly called, are a process in which the owners of a business sell shares of their company to public investors, who in turn can then trade the shares with other investors on exchanges. It's essentially the first time that individual investors like you and I can purchase shares of a company. And it's a big deal. An IPO for many is proof that a firm has made it and finally stands as a legitimate corporation. But there are a number of steps that must occur before stock can be sold publicly. Firstly, the company must hire an investment banker. Now, I know that title gets thrown around a lot, and people sometimes confuse an investment banker with an analyst or an advisor, but an investment banker is an individual or group of individuals who first and foremost help companies raise capital. And in the case of an IPO, they will work with the company to ensure that they get as much money as they can from the share issuance. After all, the primary objective of an IPO is to raise money. So the banker will help with both IPO administration and marketing. The investment banker also underwrites the stocks, meaning that they will be the ones who actually sell the shares to investors on the company's behalf, sometimes with an associated guarantee that a certain dollar amount will be raised. Once the two parties have agreed to the underwriting terms, the second step is for the company to file a registration statement with the Securities Exchange Commission, or SEC. The statement will include information about the company's operations, finances, management, etc. And the SEC will investigate the disclosures to ensure that they are accurate and that the company in question is competent enough to trade publicly. If everything checks out, then they'll set a date for the company's IPO. Step number 3 is to create a prospectus. Here, the investment banker will compile information about the company, including financial performance and expected future operations, and consolidate it into a document for potential investors. The investment banker and the company will then circulate the document amongst institutions and individuals with money to invest, a lot of it, hoping to generate interest in the IPO. After marketing the business, the company then allows interested investors to submit indications of interest, basically letting the company know how many shares they want to buy. And once the company has an idea of what people are willing to pay for their stocks, they'll set the IPO price, the amount the first public investors will pay for their shares. The company will also finalize its IPO allocation, confirming how many shares each investor will get. Now, sometimes an IPO will be oversubscribed, meaning that the demand for shares is higher than the number of shares being sold in the IPO. And when this happens, it means that some investors will only get a fraction of what they asked for, while others will be left with nothing. But alas, with all regulatory requirements met, an IPO price set and subscriptions confirmed, the IPO date comes and the company sells their shares as per their allocation, celebrating their success with the ringing of the exchange bell, an honor that notable IPOs receive, and a very euphoric moment for those involved. At this point, after some further book building, the investors who received shares are able to trade them on public exchanges, thereby generating the stock's first market price and thus concluding our IPO process. So that's how a stock becomes public. And at first glance, the process doesn't really appear to set off any red flags. Even still, many investors refuse to participate in IPOs, arguing that from a value perspective, the stocks are typically too expensive when they first enter the market. In fact, a number of studies have highlighted that at an aggregate level, IPO shares tend to underperform. Why? Well, recall that the primary objective of an IPO is to raise money. That means that the investment banker and the company are going to try and get the highest price for their shares. After all, the owner is effectively cashing out all or at least part of their ownership. So naturally, they would want to sell high, something that goes against an investor's objective of buying low. But it's not just the company's wishful thinking that increases their IPO price. There are explicit factors that generally make IPO shares more expensive than shares already on the market. Firstly, as we mentioned earlier, the company and the investment banker actively promote their shares during the IPO process. In fact, many companies carry out a roadshow when circulating their prospectus, like an actual roadshow, going around to potential investors and attempting to create hype around the stock like a politician campaigning for office. During this
So in this part right here, I'm going to stop it right there because you could go and finish the video yourself. I don't want to show the whole thing. But anyway, so that particular point there is so true because there's a guy here named Chamath, right? He's very active. Of course, he's investing in Tesla, the success of him, holding it for long term. And that's where he make most of his money, coming from Tesla and many other investment, right? That went pretty well for him. Now, his background was he was part of the executive when Facebook was around and they were experiencing massive growth of, what it is now called Meta. And he was responsible for that. So he kind of promoted himself. Now, in the past 3 years, he's been kind of promoting a whole bunch of IPOs to the public. And he made a whole bunch of money doing that. So, case in point, Clover Health. And we know that, Clover Health was kind of pinned against, short sellers and all that stuff, right? Like the whole time period of what GameStop used to be, it's like, it was shorted. And so this is the part where they were kind of pumping. Now, I'm not saying Chamath is part of like that type of, Toby. Sorry about that. But anyway, so this is the part of where, this type of company was pumping to the public in order to kind of generate that type of a sentiment that, oh, shorts are, are shorting this company, therefore this company went down in price dramatically, right? So that's just the sentiment that they have been kind of giving retail investor, the apes and all that stuff, right? And yeah, I bought into it in the previous years. Not to say that these companies do not have any value, but at the time it was pushed to the public, it was overvalued, right? To the tune of like 10 times its market price or enterprise or whatever, right? And so this particular video kind of break down on how terrible it was for investor to jump in initially and bought it and then held it a couple years later. Case in point right here, Clover Hill used to trade, around this time. This is when people start to pump it to you, saying that, oh, short seller are attacking these stocks and, oh, short seller. But it was just a natural movement of, IPO, because again, it was overvalued at this time. So the actual balance sheet cannot support this type of valuation. So the early investor, because they already bought pennies on the dollar when they first pushed this particular stock to you. And so let's see, in one point right here, obviously Clover Health do not make any money, losing 4 or 5 years straight in terms of net income, right? And so okay, 1 second here. Let's see. So I think which part was the one? So this is another IPO that he was pushing as well. Open Door. I remember this instant here when he was kind of pitching it on CNBC, and this is the type of media that they would, or type of content that they would push in order to get you to buy into the stock, right? And this guy, of course, like, he's very well manicured, very well spoken, very intelligent in the way that he chooses those words in order to get you to buy into this particular stock. Little did the investor know, he has a whole bunch of shares that he's waiting to deploy, that he's waiting to sell at a very high valuation, right, or price point. In this particular, let's see, if you want to watch the whole thing, I'll link down below too, so you could go ahead and watch it yourself. Again, it's just a video that gives you the idea of what's going on in the IPO world, right? Just because they pushed out to you all of this Virgin Galactic, right? Remember that's the back in Blue Origin Day, back in SpaceX Day, right? This is the guy who was kind of a space race, right? And of course they pump it during that time, when GameStop was there too. I bet you anything if you put all of that in here. So Clover Health right here. And the narrative at the time was being pushed that it was short seller that was the one that do these things to the stock. But if you were to kind of zoom in here, this is when GameStop went up like crazy, and there's a blip here, there's a blip here. Now, in terms of percentage, it's tough to kind of let you guys see that because it's like a daily chart. And so if you compare it from the time that it was pumped to the public, choose a plan. No, I don't want to choose a plan. So this is January 2022, but it's somewhat, kind of follow again like this bar. The bar is GameStop, but the lines, the orange one is AMC, the teal one is Clover Hill, right? So it's kind of pump and dump like that, and that's the whole reason. Is like the whole reason to do that is to drive volume away from GameStop, and initially, like you see this little pump here before GameStop goes up. You see even AMC as well. So these type of company are controlled by these entity, right? And that's why anytime they pump you a certain stock, it's always at the expense of GameStop, right? And if you look at that pump, initially they get the pump for Clover Health, they get the pump for AMC, but then subsequently you get the dump on GameStop, right? So they use the profit on that pump to short GameStop even more, or maintain their position, whether adding more short or even kind of buy little at a time in order to not cause the price action to go terrible, or even just short even more, right? To try to again scare as many people as possible in order to drive the volume away from GameStop. It's just my opinion, obviously, and you could see those type of video that CNBC usually is the one that push those type of video to you in order to get you to buy into this stock, right? And then they cloak it as financial news, right? And again, like the same way that they were pushing Sam Bankman-Fried to the public before FTX was found to be fraudulent, right? And elevate Sam to be one of the good billionaires out there that is there to help people. Okay, so that's one there. What am I talking about here? So this one is going to be about I'll save that later. But anyway, so I was gonna finish my thought on Bitcoin right here. So just went up 5%. That's crazy. Anyway, so yeah, crypto is going up like crazy right now, and of course there's a lot of pump and dump being and again, it could just be the natural movement of Bitcoin here. This is the way that it runs. This is the market that I was used to about 4 years ago, or even 3 years ago. And so, right now I'm kind of heavy into crypto. I have not added quite yet, but I am looking to kind of invest in those type of stocks. So Riot's going to do quite a bit better now. Don't be enthusiastic and then jump all into crypto right now, because when they pump Monday, it's going to dump, right? So typically you want to buy crypto around like Friday, right? Every Friday, add some crypto into your portfolio, right? If you are able to. Right now, I still have Robinhood. Obviously, that's the best place to have exposure to crypto. Just keep in mind, though, when you buy crypto in Robinhood, you're not going to kind of hold the same crypto, so you need to be aware of that. Currently, you have the run of wow, like that's like a lot of run. So Lubrink's going to do pretty well too, because it's on Ethereum. So if you look at that, 10%. Wow, that is amazing. So it's going to run how far it could be 10x from here for loop ring, right? It used to be $3 at some point, at one point. So that's good. I mean, I'm not pushing anything. So if you want to do your own research on the crypto bull market, I'm kind of worried about how people are gonna view this, because like, again, XRP has been kind of suppressed for a long time, and it never experienced any bull run for the second time right here. So anything that is being suppressed, it's going to come to the surface, just like GME, right? And so I'm very happy to see Bitcoin goes up here, because I haven't told you guys this, and actually I make a video about it years ago though, about Celsius. I got involved in Celsius. I got a whole bunch of crypto in there, a whole bunch of XRP, and I wish I hadn't put in there because I thought it was safe. But the lawsuits for Celsius is kind of come to an end, and the higher the Bitcoin and Ethereum value goes up, the better for me in terms of recovering all of my funds back. So I'm kind of have, again, I'm biased here because I want the price of Bitcoin and Ethereum to go up. But as far as any other coins being pumped right here, be careful with this type of pump, because again, yes, even though XRP has been suppressed for a while, many other coin could be pump and dump. So I only focus on the coins that has the actual utility part of things, that therefore you have to do your own research in order to get into this type of market. Again, it's still unregulated. Any of these coins right here, even Matic, Chainlink, you have to understand what they are doing. Why are they pumping? Why are they valuable in this crypto space? So again, each crypto solve different problems, so you need to understand each one if you want to get into it. I have XRP because it promised to solve cross-border payment. I've used it before, and it's very fast, right? So that's why I invested in it many years ago. And of course, Ethereum, I had a whole bunch of Ethereum due to Celsius, the way of doing business, right? And of course, it turns out to be fraudulent and whatnot. But there are still some asset that is stuck in that lawsuit. That's why I'm waiting for that. And so if the price of Bitcoin, if the price of Ethereum goes up in value, I'm gonna get more and more of my funds back. So this is good for me. Okay. So that's my biases. That's my disclosure right there. So I have a couple thousands of stellar rumen here. The same type of deal as XRP. It just has a little bit more of a I think it's like it solves a different type of problem too. Yes, it is trying to solve the cross-border remittance payment and all that stuff, but they also kind of focus on the unbanked people too, right? Who doesn't have the bank account and all that stuff. So they're trying to onboard as many people as possible, and on top of that, they cloak themselves. I don't know if it's actually true that they're a nonprofit, and there's a foundation, Stellar Foundation or whatnot, and they tout themselves as a nonprofit. But you know how it is, just because you are a nonprofit doesn't mean that you are benevolent, right? They might have some benevolent ulterior motive here also to pump their own bag, right? So again, you have to kind of separate the people who actually want to make money and the actual coin, the actual technology itself that will allow businesses to kind of build on this blockchain evolution or whatever. I'm not sure if it's good or bad. the fact that it could be traceable and all that stuff, and we don't have sovereignty over our own life anyway, even right now. Just recently, actually, I was looking at Moran's page right here, and of course he was blocked, right, by right here, by YouTube, censoring his content, saying that he can't, make any money anymore. So these type of things is going to continue to happen. And then, yes, I know, like, the future is kind of glimpse at this point in time, in my opinion, but the value is there. It's a trade-off, right? So the technology has helped people tremendously to become more productive, more education, more, aware of what's going on. It depends on who you're watching, obviously, right? You could get misinformed as well by other entities. So you need to understand how to kind of sort out what is the truth and what is the lie, and just not believing in everything that you hear, right? So, like, for me, for example, I might have good intention, but I might get the information wrong. You see what I mean? So that's also possible as well. Yeah, but anyway. So this is why I feel like crypto was due to get a pump, right? There has been a block from Tether. Now, Tether is a USD. It's pegged to $1. So this particular coin only, this particular coin only worth $1. So for every one being mint, it's going to be mint to the value of the dollar, right? And so when Tether, the controversial is that we don't know where Tether comes from, right? Whether it's being minted, like if there's new block being added to mint $1 billion worth of Tether, whether that $1 billion is backed up by real money or it's just printed out of thin air, right? So that's the unclear thing that we as it's unclear to us who actually hold that $1 billion and what is it in? Is it in U.S. Treasury bond, or is it in some other funds that might fluctuate? So that one-to-one peg might not be one-to-one peg. I hope that makes sense, because the value of that 1 billion depends on what asset is held, whether it's gold, silver, or all that stuff. Even gold fluctuate in price. So you want, that 1 billion to be as liquid as possible. And so there's no way to edit that, right? Because again, it's not from the US, Herbie, whatever, Bahamas or whatever, right? So this happened a month ago. So people were preparing for this run. It's just indicative of, like, people aren't either enthusiastic about buying Bitcoin, whether it is institutional or it is some other entity like you and I buying Bitcoin. That is to remain to be seen. Or, somebody just want to pump up their asset and they have a whole bunch of Bitcoin or crypto. There you go. It's the easiest way to do so, right? So the run is coming. Just be prepared. If you have some crypto, make sure take some profit that you see fit. I know my price point for XRP and many other crypto that I hold. I am holding Lubri as well. So just so you know. So full disclosure. All right, so we've talked about IPO. We've talked about... Okay, so the trend of IPO obviously kind of indicative of what might be a bubble, right? Anytime there's a lot of IPO pushing out to the public, it seems like it only happened when the bubble is about to burst, right? When there's a lot of them coming. And so, let's see. So this chart right here, distribution for the first day return by year. So most of the time, IPO returned the first day 40%, right? But then the next day it went down like crazy, 20%, 40%. I think that's what it reads. But missing opportunity or liquid premium. So liquidity premium. Liquidity premium, it just means that you are able, whoever got in first, get to cash out in front of you at a profit, right? Just think about it. Let's say you were buying Bitcoin at $1 and now you see it at $20,000. Wouldn't you want to cash it out at $20,000? See what I mean? So you've already $20,000, 20,000x your money. You see? So that's the whole idea, is that, why would you want to wait more for Bitcoin to drop to $3,000 when you could sell it at onset $20,000? Again, it's just an example here. An IPO, it makes them easier to overinflate the value. All you have to do is just pump it up, like, have people like Chamath right here, who, again, very well-spoken, very smart, articulate, very charismatic seeming, right? And when you have people like this who's able to promote your company, and again, like it's self-promoted too, meaning, he's good at marketing. That's why he was able to expand Facebook to the way that it is now. And so he used that credential or authority in investing to kind of, I wouldn't say scam people, but I think it's borderline, right? Because again, he cashed out within a couple of years or so. And one of the things that I want to kind of point out about that is that why isn't there anyone, do a 2 hours documentary about this guy, right? But they do 2-hour documentary about Ryan Cohen being a meme king. You see what I mean? So that's just a juxtaposition there. Now, when the company go IPO, usually they want to raise capital, and there's usually a middleman, and this is the middleman. The middleman is usually the one that pumped that stock to you, whether it's CNBC, whether it's Chamath Palihapitiya. They might be the investor themselves who are trying to sell you the company. Hey, this company is going to be this and this and this. This company is going to make 10 times the money, right? Whether it's true or not, you have to look into the balance sheets, right? And 9 out of 10 times, most of those companies do not make any money on the onset. They might have some asset, and the capital that they're going to use is usually raised by the public. And the public is usually the one that holds the back, right? Meaning, well, with the exception of people who buy in and jump out in the first day or so, right? So a trader usually is looking for companies like this, IPOs and all that stuff, in order to make that quick return. Again, it's very risky, right? Because again, you could lose that money as well if you don't know how to trade it. So it's just saying here that most IPO, say on average, pop from 19 in the 80s through the 20. All data underpricing data. So tech IPO, non-tech IPO. So tech IPO usually on average, hold on, let me try to make sure I read this right. Average first day return. So techs usually perform a lot better in the first day though. The first day it jumped 31%, but then it immediately dumped. Okay, so that's what this means. So on the EPS, meaning price per share, earnings per share less than 0, meaning negative earnings per share, usually IPO'd, and then they get 26% up the first day. So it just shows you the enthusiastic about companies that are pumping to you. Usually you losing money, they want to pump it to you on, because when you see higher percentage, usually you want to buy it at that price. When you see a company that actually making money, meaning earnings per share is in the positive, they don't pump as much, right? Again, like any IPO is already overvalued, and then on top of that, the price movement the first day usually get people to lose money here. And again, retail usually buy at the top, and that's how they lose most of the money. And that's why they call us dumb money. That's the whole reason why, because we just believe in whatever they pump it to you. Right. Okay, I was looking at the prospectus for my investment on my 401k here. It's just doing some research here. Right there. So nothing there. Looking at the housing again, so I'm not going to kind of do that. So earlier I was watching, this is why it prompted me to do something about Warren Buffett and Peter Lynch. Obviously, I talked about Peter Lynch before. There's a X page that is called Investment Wisdom. And I kind of come across this because of Moran's page, obviously. So we retweeted this. Look for small companies that are already profitable, which is Gamestop, have proven that their concept can be replicated. So that means just looking for a company that is small, company that is already profitable, and then and has a replicatable concept. So buying and selling goods and services is what we're doing in GameStop. So therefore, Peter Lynch think it was a good idea to do that. What else? And of course, if you look at the page, there's so many good quotes out here to kind of motivate you into becoming a better investor here, right? And I love these type of things because it gives me some kind of roadmap to what, okay, so why am I interested in Bitcoin, right? Well, because I understand what Bitcoin is, my personal knowledge here from what I've learned about it, the network and all that stuff, technology-wise. It's something that I think it's going to be valuable in 10 years from now, right? Even more valuable than it is today. But if you read right here, we don't have to be smarter than the rest, but we just have to be more disciplined than the rest. Meaning, you don't have to be smart to kind of like pick the right stock at the right moment all the time, right? All you have to do is just being disciplined at picking the right stock and at the best time, most of the time. I hope that makes sense, because what I'm trying to say is that when you know what you are into, just being disciplined in buying into it. That's what I'm trying to say. Anyways, Charlie Mongers is his partner. So anyway, if you want to kind of look into this one, And then this one is about high margin and all that stuff. Of course, we need to fix our margin for Gamestop. So, all right. And then what's the other one here? Okay, so the next topic is going to be, okay, let me take a break real quick and I will be right back. Hold on. So I'm going to leave this page for you to read a little bit, but I'll be right back.
I feel like the pain in the past, it needs to stay in the past. You gotta take off the gas, I
back. Whew, sorry, I had to cut the little bushes over there. Totally forgot about this. But anyway, so, alright, so where were you? Where were we? Alright, so I lost a whole bunch of you guys. That's fine, that's fine. So let's continue on with this particular news. Obviously, it was on Friday, and always on Friday, right? They don't want to kind of cause the market to crash or, cause any panic around the pump and dump, right, of the SPY. Remember, this is after hours too. So we found this out Friday after hours. So Monday is going to be interesting, obviously, right? Of course, this is FDIC insured bank. However, it went under. Citizen Bank in Ohio. Ottawa. I don't know how to say that. But, and so they went under. The bank has approximately $66 million in total asset and $59 million in total deposit, in addition to resume all of the deposit. So Iowa, am I saying Iowa? Ottawa. Trust and Saving Bank is the one that's going to resume the bank. So they're going to take the asset, and of course the liability is going to be on their book now. So the people who are depositor of Citizen Banks is going to get up to $250,000 back. If they have more than that, of course, they're not going to give you more than that. But I'm sure the majority of people who have the account in that bank, obviously it's not billionaires, obviously, right? So it's insured. And it looks like it only going to cost FDIC insurance $14.8 million. What does this tell me? I just feel like it is more to come. Obviously, you don't see the panic in the street yet because these are regional bank. But anything that happens in regional bank, you think it doesn't happen in the big bank? You're probably mistaken, right? We've seen, Bank of America have unrealized loss of so much billions of dollars, right? Hundreds of billions of dollars. But this is regional bank, and only, $15 million or so. They can't even cover that. That's bad as a bank, right? There's probably some terrible decision on the part of the CEOs, and whether they don't know how to manage risk as a banker, right? They put too much in the investment, or lent out too much, and all that stuff. Now, to me, it's pretty easy to fix this type of thing, and I've done a video before on that. I think it's when. Let me see real quick. No. What am I doing here? Let's see. I was going to look for FDIC. A video that I used to do before about how to fix this shenanigans, right? And to me, it's, again, very simple. It's a simple solution to fix it. And it's right here. So if you want to watch that, we'll see. Okay, let me kind of speed myself up here.
Actually, I'm trying to make this video since yesterday, but I just felt like it was kind of fell short of what I want to kind of drive home,
Okay.
being widespread into the bigger bank out there, right? Now, with that whole ramble there, I want to bring.
Mr. Bloom has 2 minutes.
Commissioner, Mr. President, I rise again, I'm afraid, to make the same old hoary speech that I've been making here for several years, and that is, it is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. It isn't some sort of tsunami. They're broke because we have a system called fractional reserve banking, which means that banks can lend money that they don't actually have. It's a criminal scandal, and it's been going on for too long. To add to that problem, you have moral hazard, a very significant moral hazard from the political sphere. And most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, but counterfeiting by any other name. The artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time. Retail banks for manipulating LIBOR. The sheer effrontery of this is quite astonishing. It's central banks that manipulate interest rates, Commissioner. And plus, underneath all this, we talk loosely, in a rather cavalier fashion, do we not, about deposit guarantees. So when banks go broke through their own incompetence and chicanery, the taxpayer picks up the tab. It's theft from the taxpayer. And until we start sending bankers, and I include central bankers and politicians, to prison for this outrage, it will continue.
And keep in mind that was 13 years ago. Okay, when was this? Yes, since 2000, no, 10 years ago. And it's still happening, obviously, and we see that whole thing. Now, the simple solution in this video, I kind of explain how you could fix this with the simple solution. And we had that ability already, but somebody took it away. Guess which president took it away? I'm just going to leave you to do your own research on that. But yeah, so they took that ability away. So now bank could use your deposit money into lending so much more than they actually could generate whether it's a risky loan or it's just the amount of loan that is being created is just so much, right? Over leveraging, whether it's to support their own derivative or whatever, right? So all of that needs to be separated. If you were to kind of split the bank from a commercial bank to investment bank, you would not have this happening, because when the investment go bust, like I'm explaining here, it doesn't affect the commercial bank, and taxpayer money shouldn't even have to kind of regulate this, right? Or the taxpayer money wouldn't have to pay for the mistake of this particular thing, because the community bank, the commercial bank, are going to be kind of solvent, right? Because they should have regulation too, right? Because the purpose of commercial bank should only be to service money in, money out, right? And they shouldn't be lending money, like the substantial portion of their portfolio, to whatever the industry that they think they're gonna make money off of, right? So that's the whole danger, is that they should only be profitable in like small percentage in order to service, the banking sector, like the commercial bank, right? So people want money in, want check there, and all that stuff. So that's the only way to kind of mitigate this crash. Now, of course, if the investment banking industry go bust, businesses, and that's what capitalism is all about, is to kind of either you make money or you lose money. Fair market, right? If your industry doing well, you should be able to make money. If your industry is going bust because of your management, because of whatever active volcano, then your investment would go bust, but your commercial bank would stay solvent because they have the money, people's money in there, and people could take it in and out anytime they wish. And if there's loss, it'll be a small percentage loss, not to the tune of 80%, 60%, and whatnot. Now, the moral hazard that gentleman was talking about is the fact that when you have the guarantee from the Federal Reserve, the FDIC, this is backed by the government, taxpayer money, right? When you have this type of exchange, you have people who just make terrible decisions because there's no risk for them, but the risk is monument for depositor money, right? They could lose everything that you put in the bank, and that's why they have to backstop it by the government. And so again, there's no risk management. People don't know how to risk manage their fund, the customer funds. So we need to bring it back where, hey, if you are an investment banker, if you are a banker, you have the fiduciary responsibility for the depositor money. So, I mean, it's a very simple thing. And of course, the bankers now here, I bet you anything, Chase wouldn't want to do that because, again, they don't make billions of dollars. They would have to only just small, a couple million. They would still make money. Don't get me wrong. It's not like the bank just suddenly dried up. But so long as we still not have this particular act enacted, and keep in mind too, if you look at history, when this act was around, there were a period of 70 years of no bank go bankrupt. No bank was ever go bankrupt in this time period right here. Because again, it was isolated from the investment out there, right? So it exposed a lot of things, right? Exposed the risk to the depositor, you and I money, the money that we put in the bank, thousands of dollars, right? So, and the fact that it's guaranteed to be saved by the government, these people are emboldened to do the exact same thing next time, right? Most people think that, back in 2008, the house real estate, the subprime mortgage loan was fixed. It wasn't. It's in the Fed balance sheet still today. That $2 trillion that Obama print out to help the bank, it's still in the Fed, but the Fed balance sheet, the Federal Reserve balance sheet. Yeah. So it wasn't fixed. In fact, it's going to be worse. That's why they have to print trillions and trillions of dollars more. Anyway, just my opinion, right? Do I have a fact to back it up? Well, you go and look for yourself. But anyway, I'm babbling too long today. I'm sorry. So it's been more than 2 hours already. Most of it is just probably me babbling. But so for market tomorrow, I will leave you to this. So market tomorrow, Monday, of course, we have market open. What am I expecting? I'm expecting a little bit pullback here. Again, because we run pretty high and crypto is kind of going up. It's kind of indicative of like what's to come tomorrow. Perhaps they're gonna try to drop the stock market and kind of drop the crypto market along with it as well. In my opinion. Now, in this last part, hold on, let me see. So this guy, I will link down below if you want to watch a little bit more here. He is doing an analysis on the Fed meeting. So for every single time, a month after, before and a month after, what happened leading up to the meeting, right? So we saw the trend. We tend to see the trend here, right there. When before the meeting is the dark line right here, it goes up, right? But after the meeting, it's kind of tend to trend down. So this one trend up back in May. Back in March, it trends up a little bit. not by much. Back in, oh, sorry, this is June, this is May. May is kind of flat. March goes up. June went up, but the rest went down. So the sentiment is that, and this dotted line is October. So right now we are just ended of October. So this particular line is probably around here, right? So I don't know. So if the meeting, right, we just had a meeting, right, right here. If the market went up after the meeting, what happened? Usually it's going to come down. Maybe they just want to do that soft landing, right? That's what the Fed is always trying to achieve. But again, anything could happen. The war could happen tomorrow. But it seems like if the war happened, it would have been known today already, right? Usually they do it on the weekend so that you don't have time to react to the news on the stock market. You just have to know how to hedge ahead of time. So, all right, guys, that's all I have for this today. Sorry if I babbled too long and not even cohesive thoughts here. But Bitcoin's is running today pretty substantially. 5%. That's a lot of money pouring into Bitcoin right now. And the next thing I'm watching is Ethereum, obviously, and altcoin is going to explode. That's just my opinion here. Knowing this type of cycle, anytime Bitcoin goes up, a couple months later, usually Ethereum follows. How high Bitcoin's gonna go, I don't know. That's up to you to determine. So market cap of Tether just went up by $5 billion just now. Wow. That's insanity. So I don't know, again, where are they minting that from? See, max supply is not there. 5 billion. It went up 5% here. So what's going on there? They're going to have to print more to kind of keep it at $1 flat. Perhaps there's a lot of people kind of take profit here. That's why there's a jump there. Who knows? If you look at the overall, right there, market cap. So the supply, this is the supply market cap right there. Yeah, things is happening. I'm sure I will find out later on, and we will see what's going on here. All right, guys. Peace out.